Now, the reason why I like this list is because, look, you can go online and go in forums, and people are going to debate all day which bank is better and which banks are worse. But this is actually based on a survey from 3,300 banking professionals. Right? They actually have people who are working in the industry fill this out. Hey guys, before we start today, if you like the content that you get here, I want you to go and subscribe down below by clicking the subscribe button to make sure that you get all of our future content on a weekly basis, because I'm putting out these content multiple times a week, and I want to make sure that you don't miss them. Okay, now today I want to talk about which is the best type of bank, the best type of investment bank that you should be going for. Okay, now there's no right or wrong answer here for the most part. I mean, it depends on who you are as a person and what you prefer, but basically, if I were to really break down the different types of banks, I would say there's bulge bracket banks, there's elite boutique banks, there's middle market banks, and then there's regional boutiques. Okay, that's a very high level view of it. Of course, you can drill down into each of those and make it more granular. But before we dive into all that, I would just say, look, overall, if you want to do investment banking, you want to work on the biggest deals. You want to work on the most interesting deals. You want to work on the most complex deals. So that typically means that the bigger or the better the bank is, the better the experience you're going to get, right? And also the caliber of the people that you're going to get to work with and learn from is going to be higher. The clients that you're going to be able to work with are going to be more interesting, right? And so this is why I always tell people, like, look, the sooner you can get your offer, typically the better the offer is going to be, because if we look at the level of selectivity or how prestigious a bank is, or how big are the transactions that they work on, I would say bulge brackets and elite boutiques are at the top. Those are like the tier 1 banks. And then I would say middle market banks are below that. Let's say that those are the tier 2 banks. And then there's kind of the regional boutique banks, which are like I guess we could call them tier 3, but in reality, if you get to the regional boutique level, it's more like probably anywhere from tier 3 to tier 10, because there's so many of those banks. There's like probably thousands of them, just in the US alone, right? Probably, I don't know, 1,000, 2,000, 3,000 investment banks at the regional boutique level. So there's a much wider variance. Okay, so I just want to first get that out of the way. And like, if you don't know who some of these banks are, I mean, I can just pull this up for you. One list that I like to go to is the kind of prestige ranking list from the Vault Guide. Okay, now the reason why I like this list is because, look, you can go online and go in forums, and people are going to debate all day which bank is better and which banks are worse. But this is actually based on a survey from 3,300 banking professionals. Right? They actually have people who are working in the industry fill this out, right? And they work at 85 of the top investment banks. So my point is, these are people that actually work in the industry and they actually know what's going on, and it's a large sample size. So it's still somewhat subjective, but this is the best list that I've seen, and I, for the most part, agree with this ranking, right? So you'll see, like, Goldman Sachs is number 1, Morgan Stanley, JP Morgan. So these are all bulge bracket banks, right? Evercore and Centerview are probably considered to be the two most elite boutiques, right? Or two most prestigious elite boutiques. Lazard is also up there, another elite boutique. Moelis is an elite boutique. Bank of America is a bulge bracket. Credit Suisse is a bulge bracket. PJT is an elite boutique. And then we go, that's the top 10, right? We go 11 and 20, elite boutique, bulge bracket, elite boutique, bulge bracket, elite boutique, all the more so in Europe. Jefferies is, I guess, considered a middle market bank, but they're like one of probably the top middle market bank out there. So they sneak into the top 20. UBS, bulge bracket. Catalyst, elite boutique, only focused on technology. Houlihan Lokey, another top middle market bank. So like, you look at the top 20 banks, it's basically all the elite boutique and bulge bracket banks mixed in with maybe one or two middle market banks, right? Then you go down past the top 20, then you have like 21 to 50. I think there's 50 of these on this list. Yeah. So you go all the way down to 50. The rest of these are mostly like what I would consider to be the middle market banks. Okay. And if you're not even on this list, then again, this is not 100% of the time, but if you're not on this list, chances are you're probably lower middle market or maybe even a regional boutique bank. Okay, so if you're not sure what is what, like this is a good list to reference. Now coming back to which type of bank is best for you though, again, like I already said, I think bulge bracket and elite boutiques are always going to be the best. So if you can get into those, you should try to get into that. If not, you can maybe go for a middle market bank, and then if not, then you as a last resort, you go for the regional boutique. Now between the bulge bracket and the elite boutiques though, that's a more interesting conversation, which is like which one is better, right? Now I'm going to be talking about this mostly from like a junior banker's perspective, because I think most of our viewers and listeners are more junior bankers or candidates to become junior bankers. You're probably in college or going to business school or something like that, or you recently graduated, right? So there are a few different factors that I would consider. So I wrote a post on this on Quora a long time ago, and so I pulled it up again just to reference it. You can kind of see it on screen here. If you don't follow me on Quora, I welcome you to go and follow me on Quora too. You can look me up. It's just Sam-Shaw. Okay. Now, couple things. First thing, prestige and career progression. I think that both bulge bracket and elite boutique banks are very, very prestigious. Most of these firms accept probably 1% or less of their applicant pool. In fact, I would argue it might be even harder to get into elite boutique bank in our experience, because their interviews just tend to be a lot harder. They're a lot more technical. They are hiring fewer people because they're smaller in terms of headcount, so they can be more selective. And they tend to be a little more elitist, like in terms of the schools that they typically hire from, right? Like they don't stray away from the target schools as much. Not that you can't get into an elite boutique from a non-target. Like we've helped clients get in. Like we had a client get in from Santa Clara University to Evercore, for example, which again is number 4 on this list. Very, very hard to get into. We helped a client from USC get into Centerview, which is probably even harder to get into because they only have 300 people at the entire firm. Okay, most of these firms have thousands, if not tens of thousands of employees. Centerview only has 300 people. And so USC, semi-target school, but I think he was like the only guy from USC who got in. But my point is, it's possible, but it's harder. I would say if you're working on Wall Street, look, in the top 10 bank, outside of like Goldman Sachs, Morgan Stanley, JP Morgan, you'll see like the rest of the top 10, it's made up of a lot of these elite boutiques, right? Like, so arguably, a lot of people actually view, within the industry at least, they actually view some of these elite boutiques as being more prestigious than, say, some of these other bulge bracket banks, right? Now, outside of Wall Street, like if you're just talking to your mom or your dad or your family, friends or whatever, if they're not in finance, they're probably not going to have heard of these elite boutiques before, right? So that's the trade-off, right? And also, like, depending on what you want to do after banking, because a lot of you are probably only going to stay in banking for 2 or 3 years. If you plan on staying in finance, like you want to go to private equity or hedge funds or whatever, I would say those guys, they know who these elite boutiques are. If you're trying to go for something outside of finance, or maybe you go work for a Fortune 500 company or whatever, like you're doing something else, the brand name might not be as good at an elite boutique. So that's something to consider, right? Compensation-wise, on average, I mean, both pay extremely well. I would say, on average, a bulge bracket bank is going to probably pay a first-year analyst $125,000 or $130,000 right out of school, right? Elite boutiques though will tend to pay even more. So I've seen elite boutiques pay $150,000, sometimes even more. Like my client that's going to Centerview, I believe what he told me was, including his signing bonus for his first year, he's going to get about $200,000, which is insane. That's like what bulge bracket bankers make at the associate level, like post MBA, right? And so compensation will typically be higher at an elite boutique, which is why a lot of people like going to elite boutiques, because think about it, they're doing deals that are just as big as the bulge bracket banks. They're generating just as much in terms of fees, but the bonus pool is allocated amongst a lot fewer headcount, right? And so people are going to get bigger bonuses, right? That's why that happens. In terms of the deals that you get to work on, the learning experience, I think it's going to be pretty similar, on par. The one difference I will note is that, look, if you only want to work on M&A deals, then I would say elite boutiques are probably better for that, because most of the elite boutiques are M&A shops, right? And a lot of them also do restructuring. But they don't do like capital markets deals. They're not working on like IPOs and follow-ons and debt offerings and things like that. Now, if you want a more well-rounded experience and you want to work on both, then I would say you probably want to go to a bulge bracket bank, right? Maybe work in an industry coverage group or something like that. But a lot of you, like if you want to go into the buy side, you want to go work in private equity or hedge funds or something like that, they do value like the M&A skill set more, and they don't care as much about the ECM or DCM type of deal experience, and so maybe you don't care. Maybe you just want to only work on M&A deals, and it's more technical. Then that might be fine, right? So that's something to think about on the deal experience side. In terms of who you're working for, I think at the elite boutique side of things, this is even more important. Is like, who are the senior bankers at the firm? Because a lot of these elite boutique, the way they came about is some of the most senior bankers at some of these bulge bracket banks after the 2008 financial crisis. All these regulations got implemented by the government, and there's all these restrictions on compensation and deferred comp, and things getting clawed back. And these senior folks are just like the rainmakers. They're like, dude, screw this. I'm just going to go and I'm going to start my own bank. I'm going to make a lot more money. I have all the relationships anyway. I'm bringing all the deals. Why am I not getting a bigger cut of this? Right? So, but then like how well your firm's going to do is going to depend heavily on the quality of the senior team at your firm. Right? Like if your senior bankers are really, really good, you're going to work on some amazing deals, and you're going to have great deal flow. If your senior bankers aren't as impressive, then you're probably not going to be working on as big of a deal, and your platform is not as big as, say, like a Goldman Sachs or Morgan Stanley or JP Morgan, right? And they have other competitive advantages that these elite boutiques might not have. Like some of these bigger banks, they have a balance sheet, right? They can provide financing as a package deal with their M&A advisory services, right? And sometimes like, hey, I'll give you the capital that you need to buy this company, and I'll give you a very low interest rate on that, right? So those are things that you got to weigh. But who you're going to be working for is really, really important. It's really critical. And so you have to, that's obviously on a case-by-case basis, right? And bankers, senior bankers especially, move around all the time. So I'm not going to be overly prescriptive here. You just have to kind of meet the firm and really evaluate that for yourself. And then the last thing, this is probably, I would say personally, the lowest on my list, at least for junior investment banking positions, which is like the culture. Okay, I'm not saying culture is not important. If you go to a firm with good culture, you're gonna have a much better time than if you go to a firm with crappy culture, right? Like, so for example, firms like Evercore and Centerview, like they're known to have very unique and very awesome cultures, and that's a great thing, right? And Goldman Sachs obviously has its own very unique culture, like that's a great thing. But the reason why I typically rank culture the lowest on this list is because what I found is, first of all, banking culture, it's going to be slightly different from firm to firm for the most part, but it's not going to be that different. You know, you're working with very type A personalities. Everybody's very hard charging. Everybody works super hard. It's a demanding job. You're going to be held to very high expectations. You need to be super responsive. People don't want to hear excuses. Like, those things are pretty much universal across the board. Sure, are people nicer somewhere than others? Like, yeah, maybe. But like, those are things that are going to be hard for you to evaluate from the outside looking in anyway. Like, culture is one of those things where people are always going to tell you they have great culture, but until you actually work there and really experience it for yourself, you're just not going to know, right? And also, secondly, like, two different people can feel very differently about the culture of the same group, because maybe person A gets along really well with the people in that group, and person B has a totally different personality, and they just don't get along with anyone in that group. And they're going to tell you that that group has a crappy culture. But does it really? Right? And so it's kind of subjective. And then like the last thing is, like you in terms of culture, it's not even at a firm-wide thing. Like, yes, there's firm-wide culture, but I would just tell you, like, culture is more, it happens at the group level. Meaning, like, if you work in a technology investment banking group at Morgan Stanley like I did, versus if you worked in, say, the consumer investment banking group, or the financial institutions group, or the sponsors group, like, every group actually has a different culture, because culture comes from the top down, comes from the senior bankers that are in your group, right? It comes from your group head down to the other MDs and whatever, and like, it's how they prefer to work. What is their working style? What is their management style? That's going to determine the culture. So to me, it's a little bit silly to even say, oh, the culture at Goldman Sachs is great. Well, which group in Goldman Sachs? It's like each group operates almost like in its own silo, and it's different from the other groups, right? So again, that's why I typically rank culture last. It's not because it's not important, but also, like, look, if you end up in a group with a crappy culture, you're most likely only going to be there for 2 or 3 years anyway, at least the vast majority of you. So it's not the end of the world. Then you just, bite the bullet, suck it up, learn a ton while you're there, work on a lot of really awesome deals, and then you get out of there, right? So to me, the more important thing, the most important thing when it comes to your banking experience is not the culture. I would say compensation obviously matters, but that's also not the most important thing. The most important thing to me is that first piece. It's prestige, it's career progression, and tied in with that is your deal experience, because that's what's going to set you up for the long run. That's what's going to really impact your career trajectory, right? It's not going to be, oh, am I making an extra $10,000 or $20,000 this year? Yeah, it's nice, but it's not going to change your life, right? What will change your life is like if you have much greater exit opportunities coming out of banking because you worked at a Goldman Sachs or a Morgan Stanley, as opposed to, say, I don't know, a middle market bank, right, or something else like that, right? Like if you want to go to private equity or a hedge fund, for example, like the size of the fund that you're eligible for, or that will be interested in recruiting you, is directly correlated to how good of a group you worked at while you were in banking, right? So that to me is probably my personally my number one criteria. But with that said, again, Bulge Bracket, Elite Boutique, at the end of the day, my advice to you is this: apply to both. They're both amazing options, right? You can't, with how low the probability is of getting one of these offers, you can't be picky, overly picky about it. Apply to everything, see what you get. Sometimes our clients get multiple offers from both Bulge Bracket and Elite Boutique banks, and then they have that choice, and then you cross that bridge when you get there, right? But sometimes you might not even have that choice. You might only get one offer, in which case it's going to be decided for you. So don't stress out too much about this, and don't put the cart before the horse. Just make sure you're doing the preparation that you need to be doing. But these are the things I would be thinking about if and when I ever got to that point. Okay, so hopefully this helps you guys. Hey there, I hope you enjoyed this video. If you're looking for more customized advice that's tailored for your specific situation, then I invite you to book a free strategy session with our team at the link below. We'll talk to you soon.